And on that note, let's also bring on board Deven Choksey and talk about in greater detail as to what to expect from the numbers later this evening. Deven, hi morning. Like Ajay was just highlighting, firstly, when it comes to the Petchem business, the strength in GRMs clearly seems to be at par, and it seems like it's going to manage to support Reliance in the second quarter performance as well.
Yes, I think good morning. You look at, I think, the second quarter and the Singapore GRM. Singapore GRM has by and large operated in the vicinity of around $6.5 per barrel. Reliance normally ends up producing an alpha of around 3.5 to 4 over the Singapore GRM. That's a benchmark on which I think the refinery is working. So if you consider that, then I think the possibility of refining margin coming back to $10.5 per barrel in this particular quarter is distinctly there. If you look at the refining cracks, I think except LPG, rest of the cracks have actually shown an up move and the uptick in the current quarter ended September as far as I think their pricings are concerned. Given that kind of a situation wherein I think the Reliance has ended up supplying more amount of refining products due to the disturbances in the Gulf region, I would think that I think the margin on the refining side would definitely be remaining on a higher side. On the other side, petrochemical business I think is likely to be rating at a production level of around 10 million metric tons per quarter, which means I think a total capacity of around 40 million metric tons, on which I think the petrochemical business is likely to produce the volume in this quarter. Though there might be, I think, some amount of pressure on margin here in this quarter, but overall, I think the contribution from the energy portfolio of business, which is the refining and the petrochemical, is likely to be, I think, far more superior. We believe that somewhere around 11,800-900 crore kind of an EBIT contribution would be coming from the energy portfolio of products as far as Reliance is concerned in this quarter.
About the consumer business, you think more than the numbers, what do they say about the future outlook? The sort of matrix that they deliver will be much more important?
Yes, absolutely. I think the consumer business portfolio consisting of retail and geo particularly, and I think what you have seen probably is marked growth. In fact, I think when I did the YOY and the QOQ kind of a number look and the expected number for the current quarter, I find that I think current quarter the EBIT contribution from consumer business could be somewhere around 5,200 to 5,300 crores vis-a-vis the year contribution of around 3,700 crores, and I think the last quarter contribution of somewhere around 4,700 crores. So obviously I think this engine is running at around 45-50% kind of a growth as far as contribution to the EBIT is concerned, and that's where I believe that I think this business is likely to grow faster. Geo Fiber has kind of a narration probably in it, wherein you are likely to see the growth on a sequential basis of around 10 to 15%, and which could possibly translate to at the end of the fourth quarter a growth definitely in excess of 55 to 60% as far as I think the Reliance's portfolio from the consumer business is concerned. So Geo definitely appears to be, I think, taking over the core business profits somewhere down the line 6 quarters from here onwards. I think that's what I think our take is.
All right. Thanks so much for joining us this morning, Deven, on what to expect from RIL.